Hi, it's John McCracken here from Hotel News Now with President and CEO of La Quinta, Keith Cline. And Keith, pretty exciting week in Dallas for you, a lot going on, talking about ways to elevate the brand, which is the theme of the show. Something that I haven't heard touched on, at least in the broad session so far, is the plans announced in January.
Sure. Yeah.
You've mentioned in the past thinking about but not committing to a plan to possibly spin off your real estate. Where does that stand? Where is it in the process? How are you guys feeling about that at the moment?
Sure. Obviously, back in January, we announced that we thought the next logical step for our business to continue executing against our strategies was to separate our real estate potentially from our brand and our management company. At that time, we mentioned it takes about 7 to 10 months to complete a transaction like that once you make the announcement. And we also mentioned on our year-end call, which was just this past month, that we would issue our Form 10 sometime in early second quarter. So between now and let's say the middle of May, I would expect something to come out on that. But in terms of the genesis behind that, as we mentioned, we're really excited about, because we believe that by separating the real estate from our brand and management company, it really gives us the ability to have two independent companies pursuing independent strategies that could flow naturally to each one, whether it's an asset-rich business like a REIT or an asset-light business like a brand and management company. And better yet, aside from the strategies, investors could select their preference. Do I want yield and strong free cash flow, or do I prefer more of a high unit growth story?
So it seems like, if this were to come to pass, it would be a very unique REIT in the space. There's no other lodging REIT that I can think of that would kind of
wholly
capture
focused
the same
in this
portfolio.
Space. Right.
Have you heard much from investors that they're interested in that sort of property? What's the feedback you've got?
Yeah, they think it's a very unique investment vehicle, right? Because if you think about the space that we operate in, right, select serve, most of our hotels are upper mid-scale. We're also in the mid-scale space. And to have a REIT investment out there initially solely focused in that space is interesting, right? Because customers are migrating there because of the price value proposition of this place in the lodging industry, and investors are migrating there from a development standpoint because of the cash on cash returns. So it is an interesting and attractive vehicle.
It kind of runs, at least anecdotally in my talking with the Wall Street folks, analysts out there, there's a perception that the hedge fund folks of the world who would invest in REITs are kind of interested in that really luxury. They have the same mindset that maybe foreign capital would be. They want that luxury asset in a gateway market that they can stay at and hang their hat on. It seems like you guys are really going after a different kind of investor who's at least has their head in a different space. Is that fair to say?
Well, I mean, our general belief is that that investor, that REIT investor, should primarily be focused on cash yield and strength of cash flow. And our own business for a very long time has been a very strong cash flow enterprise.
So have you heard much feedback from GMs of owned hotels or anyone else at the conference this week that might have opinions one way or the other on?
All very positive, right? And first of all, at this conference, people are so excited about the progress we've made against our strategies, right? Driving consistency of product, consistency in the guest experience and engagement, and really in a very short period of time, we have moved all the needles of performance fairly significantly in that regard. So that excitement is here, but they're also excited about what they think could accelerate those strategies, which is the potential separation of the businesses.
So taking another tack here, a lot of the talk yesterday was about ways you can elevate the guest experience. I mean, it seemed like you were talking mostly about elevating for guests, employees. It was mentioned that you guys are launching a new program meant to kind of drive amenities and those touch points with guests. So what kind of feedback are you getting from property level folks here on that, and why do you guys see that as the most successful strategy for you?
Well, it's really important. It's really part of the whole thing, right? So when you think about driving product consistency, product isn't just physical asset in architecture, it's also what's in the room and the amenities in the room. In terms of driving a consistent experience, once again, it's not just the physical aspects of what you see, but it's what you get to use when you're in the hotel, everything from what's in the room, in the bathroom, at the breakfast
Yeah.
or line, right? And in terms of driving engagement, you have to really take a look at what are the consumer preferences at the price points that we're operating in. So the LQ Up program, which is really about driving consistency across the amenities, we think is a subset of all of our strategies, and just further supports the main three of product consistency of experience, and engagement.
Now, do you find it, I mean, would it be easier for you guys to kind of laser in on that consistency, given that you're a company that's focused really on one brand as opposed to some companies that are all over the place?
Well, it is, but if you think about it, right, next year La Quinta will be celebrating our 50th anniversary, which is an amazing milestone for the business. If you look at our assets today, about 60% are franchised. And of that 60%, an overwhelming majority are new construction. So very fresh, very relevant. Within the owned segment, we've got kind of several generations. So as we talked about, product consistency there, even though we are one brand, is about really three different things. Number one, looking at it on an asset by asset basis, is that asset properly positioned on the street corner? If it is, then it just goes through kind of normal elevations or renovations, right? More of a cycle renovation approach. If it's not properly positioned, well, does it have the right adjacencies, right? Is it a mid-scale hotel that has upper mid-scale comp set? Well, maybe then that hotel can afford the investment to reposition it and lift it up into a new chain scale. And the third path would be if it's just on the wrong street corner, doesn't have the right adjacencies, and we need to reopen that market for development, we'll absolutely do that. So even within one brand, product consistency really is a street corner by street corner review.
Okay. Well, thanks a lot for taking the time to chat, Keith.
I appreciate it.
For more coverage, visit hotelnewsnow.com. Thanks.